You are staring at the apartment application. Credit score required 650 minimum. Your score 347. The landlord's assistant doesn't even look up when she slides the paper back across the desk and says, "Next." This isn't about finding a better deal or negotiating terms. Your credit score has locked you out of the basic life everyone else takes for granted. From here, the world splits into two: the life you can afford and the life you're denied. You're standing in the parking lot of a buy here, pay here dealership. The cars here don't gleam under fluorescent lights like the ones in your memory. They sit in crooked rows, dented and weathered, with prices written in soap across windshields. Your 347 credit score has locked you into the deep subprime category. You're looking at a 2018 Honda Civic with 89,000 miles. The person behind the desk, who doubles as the mechanic and the finance manager, quotes you 24% APR on a $12,000 loan. The math is brutal in a way that feels personal. Your monthly payment will be $347 for 5 years. That's $20,820 total for a car that's worth $12,000 today and will be worth maybe $6,000 when you finally own it. You're not buying transportation. You're renting money at prices that make payday loans look reasonable. The humiliation isn't just financial, it's the way the terms are explained to you, like you're being done a favor. With your situation, the voice says, tapping your credit report, this is about as good as it gets. The alternative is no car, which means no job, which means no way out. You think about the apartment hunt that brought you here. Most landlords require credit scores of at least 600 to 650 to rent, but yours forces you into a different economy entirely. You're paying $1,800 a month for a studio apartment that would rent for $1,200 to someone with decent credit because you had to go through a private landlord who charges premium rates for high-risk tenants. Your security deposit was 3 months' rent instead of one. Your utilities required deposits. Even your cell phone plan costs more because you couldn't qualify for the promotional rates. This is what a 347 credit score actually costs, not just higher interest rates, but a complete restructuring of how you access the basic infrastructure of adult life. Every transaction becomes a negotiation from a position of weakness. Every monthly bill carries the tax of your financial past. You're not just paying more for the same things, you're paying more for worse versions of everything because the good versions simply aren't available to you. You sign the paperwork because the alternative is taking the bus to a job you might lose without reliable transportation. And as you drive off the lot in a car that will cost you nearly twice what it's worth, you understand something that no financial advisor ever mentions. Bad credit doesn't just make things expensive, it makes you expensive to yourself. 3 months after the car payment, you are standing in a different kind of line. This one snakes around the inside of a Capital One branch, filled with people holding envelopes and looking at their phones with the particular expression of someone calculating whether they can afford to exist. Your credit score has climbed to 612, fair credit territory, the promised land of reasonable rates that turns out to be its own kind of purgatory. The credit card application in your hands offers 22% to 30% APR. This is progress, technically. 6 months ago, you couldn't get approved for anything that didn't require a security deposit. Now, you can qualify for real plastic from real banks. But the math still feels like punishment. Your starting limit will be $300 to $1,000, which means you're being offered just enough credit to get yourself into trouble, but not enough to actually solve any problems. You think about the apartment search that brought you here. Your 612 score opened exactly 2 doors in your price range. One landlord wanted first month, last month, security deposit, and a cosigner. The other wanted $2,400 up front for a studio apartment that would cost someone with good credit $1,800 total to move into. You chose the cosigner humiliation because it was $600 cheaper and because asking your father to vouch for your financial reliability felt less degrading than paying the poverty tax in cash. The irony sits heavy in your chest. You've climbed out of the deep subprime hole where every financial product was designed to extract maximum profit from your desperation. Now, you're in the middle tier where the extraction is more polite, but just as systematic. Most 0% APR cards require 670 plus. A few options exist at 640 plus, which means you're still 58 points away from the promotional rates that could actually help you build wealth instead of just managing debt. You sign the application anyway because fair credit is still better than no credit, because 25% APR is better than 35%, because having a $500 credit limit is better than having no financial cushion at all. But as you walk out of the bank with your temporary card, you understand the real cost of fair credit. You're approved now, but every rate is punishment. Every monthly bill carries the tax of climbing out. You're in the system, but the system is still expensive. So you're trapped between a 347 score that locks you out completely and a 612 that lets you in, but charges you for the privilege. Which scenario hits closer to home for you right now? Drop your answer in the comments below, because here's what happens when you finally break through to good credit territory. 2 years into your credit rebuild, you are standing in a Chase branch holding a credit card application that would have been impossible at 347, laughable at 612. Your score sits at 701, good credit territory. The banker behind the desk treats you like an actual customer instead of a risk assessment, and for the first time in years, you're not automatically disqualified from anything. The Chase Sapphire Preferred sits on the desk between you, a welcome bonus of 75,000 bonus points after you spend $5,000 on purchases in the first 3 months from account opening. This isn't the secured card with a $200 limit that got you started. This isn't the subprime plastic that charged you 29% to rebuild. This is a real rewards card that real people use to book real vacations. Your auto loan tells the same story. When you traded in that 24% nightmare from the buy here, pay here lot, your new rate dropped to 7.2%, the monthly payment on a $25,000 Honda. Accord went from $578 to $368. That's $210 a month back in your pocket, or $12,600 over 5 years. Good credit didn't just lower your payment, it gave you back a vacation fund. But here's what nobody prepared you for about good credit: the awareness of what you're still missing. You can see the premium tier now, close enough to touch, but still out of reach. The rewards cards with the most generous benefits and welcome bonuses require scores above 740. You're 39 points away from the cards that offer global entry credits, airport lounge access, and sign-up bonuses worth $1,500 or more. Your mortgage pre-approval letter shows the same gap. The real savings start at 740 plus. You qualified for the house, but you're paying more per month than someone with excellent credit would pay for the exact same property. Over 30 years, that gap compounds into tens of thousands of dollars in extra interest because your score starts with a 7 instead of a 7 followed by a 4. Good credit is relief, but it's also revelation. You can access the financial system now, but you're paying the good customer tax instead of getting the excellent customer discount. You're approved, but not preferred. You're in, but not all the way in. You've climbed out of the penalty box, but the premium tier hovers just above you, close enough that you can calculate exactly what it's worth. Your credit score has climbed to 743. Excellent credit territory. You're standing in your first Priority Pass lounge at Denver International Airport, holding a Chase Sapphire Reserve card that didn't just get approved, it came with a $25,000 credit limit and 100,000 points after you spend $8,000 in the first 3 months. The sign-up bonus alone is worth $1,500 in travel value. This isn't just better rewards, this is access to a different financial ecosystem entirely. The lounge around you tells the story. Free, premium food, unlimited drinks, fast Wi-Fi, quiet spaces that would cost $50 to access without the card, the $200 annual travel credit, access to premium lounges worldwide. But the real value isn't any single benefit. It's the understanding that excellent credit doesn't just lower your costs, it generates wealth. The card's $550 annual fee sounds steep until you realize the travel credits, lounge access, and points multipliers return roughly $1,200 in value every year. You're being paid to use their money. Your mortgage tells the same story in much bigger numbers. The difference between your 743 score and the 701 you had 6 months ago saved you 0.4% on your rate. On a $400,000 mortgage, that's $64,000 less in interest over 30 years. Excellent credit didn't just qualify you for the house, it gave you an extra bedroom's worth of purchasing power without spending a single additional dollar. But here's what nobody prepared you for about crossing into excellent credit. Lenders compete for your business now. The credit card offers in your mailbox changed overnight. Instead of applying and hoping for approval, you're choosing between competing welcome bonuses. Banks send you pre-qualified offers for business credit lines at prime rates. Investment property financing that was impossible at 612 becomes routine paperwork at 743. You realize that credit scores were never measuring your worthiness. They were measuring your access to the tools that build generational wealth. You think about the 24% car loan from the subprime lot, the $1,800 studio apartment, the $300 credit limit that felt like a lifeline. Those weren't just expensive products, they were the cost of being locked out of the system that turns money into more money. Now you're inside that system, and every transaction works in your favor. You're not just paying less for the same things. You're being rewarded for spending money you were going to spend anyway. The game hasn't just gotten easier. You've discovered it was always designed to reward the people who could access it. Your credit score has reached 823. Perfect credit territory. You are among fewer than 1 in 4 Americans who have achieved this level, standing in a Chase private client office that most people will never see. The banker across from you isn't explaining terms or checking boxes on an application. She's asking what you need. Business credit lines at prime plus 1%. Investment property financing with 25% down instead of the standard 30%. Access to private banking services that come with their own dedicated phone number and same-day responses. The revelation hits you standing in that private banking office. Credit scores were never measuring your worthiness to borrow money. They were measuring your access to the tools that multiply money. The business credit line you just qualified for doesn't just give you working capital. It gives you the ability to leverage other people's money at rates lower than inflation. The investment property loan doesn't just buy you a rental. It creates a tax-advantaged income stream that pays itself off while building equity. You think about the journey from 347 to 823. The 24% car loan that taught you the cost of being locked out. The 612 score that let you in but charged admission fees. The 743 that opened doors to rewards and respect. Each tier wasn't just about better rates, it was about access to increasingly sophisticated financial instruments, credit cards that generate wealth through sign-up bonuses and multipliers, mortgages that let you buy assets instead of just shelter, business lines that let you scale income instead of just managing expenses. Perfect credit revealed the final truth. The goal is no longer optimization, it's utilization. Use credit for convenience, rewards, and protection. Let the score fluctuate within the elite range. You've graduated from the game of building credit to the game of building wealth. The score was never the destination. It was the key to a financial ecosystem most people never discover, where money works for you instead of the other way around. You're not just approved anymore, you're recruited. And that changes everything about how you think about money, risk, and what's possible when the system works in your favor instead of against it. Subscribe if you want more like this, and watch this one next.